Good morning, everybody, and this is your Dow Jones day trade setups for today. So, as expected yesterday, the grouping of the oscillators as they are like that, with a bit of structure to the left, buyers, sellers stepped in and moved down. We are now testing this channel break and also testing the break of the moving averages. So, everything hinges on what happens now. Unfortunately, there's been a lot of noise in the market. And that noise is not something that we don't know, but anyway, it is noise. So I'm just going to add this area in here because you can see there's a lot of interest in this zone. Personally, I think we're probably going to form a range, and whether it's this range that we're in here or the bottom being somewhere down here, irrelevant. But I think that is the situation at the moment. Now, we do have a massive head and shoulders, inverse head and shoulders. There's the shoulder, there's the head, and that completed the right shoulder. So, if we get above 385, we should be looking for longs from the long-term perspective. And alternatively, if we drop below 300 area, we should be looking for shorts down to 32.835. Now, if we get down to the levels that we need to trade on a daily basis, you can see we do have some diversions brewing here, and that's continuation diversions, continuation being what's happened recently, and that is an uptrend. So that's the first scenario, and then there's also a trend line here, and that's a pretty strong trend line if you look at that. There it is there. So, I think we are testing the 155 at the moment. Big up, big down this week, massive pin bar forming. Bulls don't want a pin bar. Bulls are going to want a green candle on the weekly, so they're going to be looking for a move higher. Bears are going to want preferably a break down here or a break of this trend line to form a massive pin bar rejection. So that's kind of what's playing out on the weekly view at the moment. So if you're going to get caught up in that, you want to be caught up on the right side. Now, I said to you yesterday, this is not looking very interesting. We drifted high until the US Open, and then we dropped like a stone. Did form a bit of a wedge here. You can see sort of bolted to a wedge, and then we dropped. All these gaps that were here are closed. We are now looking for an area of structure. So, and there is lots here. You can see, to me, that's probably, let's just do this, do that, and then I think I'm just going to take this one here. That is the zone that you can see. So you can see we've already found support on the top part of the zone, and then every one of these tails here is going to offer support. Look to the left, even more. If you keep looking to the left, you see there's a lot of interest in this area. So I suspect we're probably going to bounce off here. But the question is, bounce to where? Are we just going to close a gap and then keep coming to test this and break to the downside? Or alternatively, is it just a case of big up, big down, big up, big confusion? So I'm reluctant to pick a direction at the moment. It's really not conducive to anything right now. I suppose the only thing that you did have on the 15-minute yesterday was this breakdown. It didn't find support where we were looking for it to find support. Broke down, bounced up, and then started rejecting the 155. That's not a clean rejection in my books anyway. So, I think for me, looking at the 15-minute, probably more downside coming today. Probably just a bit of a consolidation, maybe a little bit of a move back to the upside as Europe reacts to the noise that came out of the US markets last night, and we bounced down into this zone here at 34.846. Me personally, I'm not even interested in this. I will rather just keep my money in my pocket and close the charts. We'll wait for some better structure before I start jumping in on whipsaw like this. Anyway, that's my view anyway. Hope it helps, and we'll catch up with you next week, Monday. Enjoy your weekend. Cheers for now.